Okay, peeps, welcome back. So today we're going to be going over the YieldMax ETFs Technical Analysis for the week. We told y'all we were going to do this last week. So this is going to be our buy and sell zones. Let's get it. All right, so basically what we're doing here is we're going to go over each of the YieldMax ETFs, literally every single one that's available on the market to purchase right now. And we're going to go over the buy and sell zones and let you guys know what we think in terms of whether we think this is a buy or not. And again, none of this is financial advice, so let's go ahead and get into it. So we're on Tesla currently. You can see the buy zone is between 1250 to about 1350. We are below that. If we go ahead and include this as another potential buy zone down here, I would say that this 1150-ish area could potentially be a good place to pick up some shares. And we are in this falling wedge, as you guys can see. I have it outlined as green here. Basically, what that means is that basically what a falling wedge is it's a bullish pattern. So if it breaks out bullish out of this, it's expected to go back up to the top of the wedge, which is at about 1840. Does it have to do that? No, but the probabilities for it happening are much higher than it is for it to sell off. Something to keep in mind, of course, is we want to see the share price outperform before the ex-dividend date. What do I mean by this? Well, basically, whatever the dividend amount is going to be, we want to see the share price appreciate more than that, is what I'm saying. So let's say, for instance, let's just take a hypothetical number here. Let's say that we were expecting to get paid 50 cents per share in dividend. So from the current price, we would probably, so that would be about 3% or so. So basically what we would want to see is anything greater than 3% in share price appreciation, and obviously watch this repeat every single time the dividend pays out. So buy zones are down here. We're currently in one right now, and then you have 1250 to 1350. Sell zone would be up here between 18 to 1850 a share. We're going to include KLIP in this video just for fun, so you guys can see we broke out of the falling wedge. We are currently retesting it. Again, the target for the wedge is the top, which is $25.29. So our buy zones are $17.35 to $18. Sell zone up here at $19.80 to roughly about $20.50. We could also include this as another potential bounce area. It could possibly bounce in this area that it's at right now. Again, this is a support zone, so this is a technical trading pattern, not necessarily for investing, but position traders also do use these. So here's the Coney one, Coinbase. You can see that the buy zone is between 18 to 1870. To be honest, I kind of wish we had bought more and just held our shares. We had no idea it was going to rip like this, but then again, it is crypto, so crazy things can happen, as you guys can see. So the sell zone, which is actually supposed to be red, is roughly about 2170 to about 2230 a share. We did retest that with this candle bounce. As you can see here, we have this long wick, which indicates rejection off the support. That is bullish. The candle itself is red, which is not great, but as you guys can see, the candle did not close lower than the green one. If it did, that would be a bearish engulfing candle, and that would indicate the price going lower. So now we'll take a look at Aptly. You can see we went down, and we're now currently back in our support zone. Kind of what we want to see on Aptly is it basically tests the support and move higher into the resistance. We do not want to see this thing get rejected and then go back down to 1780. That we don't want to see. So the support zone is between $19.60 to $20, and the sell zone is $22.70-ish to about $23. We are currently in the buy zone for this, so I know a lot of people don't like Aptly because Aptly doesn't pay as much as something like Tesla or something like that. But if you think about it in terms of like the forward dividend, if the price goes up, theoretically the dividend should go up, right? So if that case were to be true and the dividend goes up to the resistance zone, then you could possibly expect a bigger payout and also some price appreciation. So now on to OARC, you guys can see that we are still in this falling channel. Falling channel is generally a bullish pattern. I would have to mark out what the price target is, but I believe the price target is basically the measurement of the channel. It's just so you all know, when it comes to trading, we don't actually trade channels. We usually trade the breakout of channels, so it's not necessarily the channel that we trade. But yeah, as you guys can see, we already have it marked off. So basically, if we were to break out here, we would break from 15.50 all the way up to $20 is the target. So we are currently below this support level. So this is a resistance level. If it becomes support, it would be basically 14.10 to 14.90. Then you'd move up to $17.50 to $18 and $20.60 to $21.30. Now for AMSI is looking pretty good. It's kind of in the middle of nowhere. So your support zones down here are $18.80 to $19. Next support zone, which would be the most relevant, would be $19.70 all the way up to $20 even. And then your sell zone would be $21.80 through $22. Keep in mind, you don't have to buy or sell at these zones. If you just want to hold your shares, that's fine. Some people do that. Keep in mind, there is this long wick rejection here. That's a very bullish sign because that indicates basically the buyer stepped in and pumped the price up, and they're basically like, nope, you're not selling past the zone. That's pretty much what that means. So here's the Facebook version. So you get your buy zone down here between 1780 and 1830, and your sell zone is roughly between 2070 to $21 a share. We are sitting closer to that sell zone, which is one of the reasons why we don't have FB in our portfolio right now. We'd like to kind of see it come back down here before we start buying. So GUI is a prime example of a perfect buy zone. So you can't even see this thing, but basically it's a green doji candle that closed much higher than it did lower, and we closed literally right at the exact bottom of the support zone. How crazy is that? So the support zone that we're currently at is between 1820 to about 1845. The next zone would be 1960 to 1990, and the top zone would be 2050 to 2080. Now, we haven't gone over the underlying on Google, or on GUI, I should say, which is Google, but I'm pretty sure part of the reason why this did not close higher, why it's kind of fallen off a little bit. And for those of you that have actually seen this, let me know your thoughts down in the comments below. But Google just recently released their Gemini AI chatbot, and a lot of people were saying that it was fake news, or that it's not real. That would be the expected response for something that seems like it's impossible to actually create and for it to work. Whether it's real or not, I don't know. But as a trader investor, this is a perfect buying opportunity. I mean, literally, it's the perfect opportunity. So that news, whatever the case it may be, worked out perfectly in our favor. So we're considering picking up some shares of GUI this week. So now moving on to MSFO. Your buy zone, $19.50 to about $20. Your most relevant buy zone, $21 to $21.20, and your sell zone is between $22.80 to $23.10. And we are currently somewhere in the middle of the buy and sell zone. So that's something to keep in mind. DSO, which is Disney, just so you all know, they did just recently re-announce they're paying a dividend, the actual company itself. So I find that to be quite interesting. So the lowest support zone is 1930 to 1980. The current support zone is 2035, and between that and 2065, and the sell zone is 2170 to 2180. I would say this chart overall looks bullish. We had a bunch of bouncing around here. We popped up, and now we had a wick rejection off of the support zone, and we have closed above. So that's generally bullish. So now you have NVIDIA. Basically, we have this long-standing chop zone. It's not really bullish, not really bearish. It's just kind of sitting in no man's land right now. So your buy zone would be 1970 to 2030. Sell zone would be 2390 to basically about $25. And I mean, as long as we stay in with this channel, I would say that's actually a good sign, because if we get a breakout above, obviously that's extremely bullish. You'd be sitting on massive profit. And if we get a break below, well, there's really nothing technical to go off of on that, so we'd have to look at the underlying at that point. So here's Enfly, the Netflix version. Your buy zone is going to be between $15 to $15.60. Sell zone is going to be just under $19 to as high as $20.30. Um, this chart doesn't really look bullish or bearish. I mean, we did get a rejection off of here with a larger red candle, so that's kind of bearish. But I mean, it doesn't really mean anything per se. We would need to see probably multiple red candles going into the support zone and even past it to say, okay, that's kind of scary looking. But um, I would say it's kind of neutral on this chart, not really bullish or bearish. Zomo, so you guys can see we are in this falling wedge pattern here. Again, the target for the falling wedge is at the top of the wedge, 2035. So current price, we don't have a support zone because it's trending down, is basically about 17 bucks, and your resistance or sell zone is 1980 to 2050. So something I want y'all to keep in mind. If you've been following us on X, you would know that we talked about this. But crude oil prices are currently at multi-year support, roughly around $70 a barrel. I'm actually going to go ahead and pull up that chart now before we go any further in this video. So I'll just type it in here, MCL, so you guys can see what I'm talking about. I wasn't going to include it in this video because this is supposed to be strictly for YieldMax, but because Zomo is an oil play, we'll go ahead and do a quick take on this. So as you guys can see, basically since August of 2021, this thing has been massive support between 66 to 70 bucks. If I pull up the full size crude oil chart, you guys can see going back many, many years, it has been a major support zone. See, basically this is resistance now turns support, going back as far as roughly about 5 years. So keep that in mind. We are expecting the price of oil stocks to move up, and we are expecting oil to move up, at least to some extent, from this zone. We'll just have to wait and see if that plays out. So trying to get back to the YieldMax ETFs here. All right, so the last one we covered was Zomo, so now we're going to do PYPY or PayPal. All right, so the buy zone for PayPal is 1750 to 1780, and the sell zone is between 1988 to 2023. Keep in mind, PayPal does not, I quote, does not pay a dividend, as far as I know. That could have changed, but I'm pretty sure they never have and probably never will. So we are closer to the sell zone than we are to the buy zone. It's up to you guys whether you think this is bullish or bearish, whether it could go higher or maybe waiting for a pullback. So AMDY, not really a whole lot of data here. Our buy zone is basically around 18 bucks to 1850. You can see we got this weird pattern going on where it's kind of just trending up. This could be a classic textbook, what's known as a bump and run pattern, or this would be basically an inverse. So how do I want to explain this? So basically a bump and run would be something like this, goes down, comes back up, goes down, and then you kind of get this rip out of it. So I know it's a bad chart, but basically the bump and run would look kind of something like this. So you get this kind of move into this area, then you get a drop down, and then you get another move up, then you get another drop down, and then you get this massive rip out of it, and you kind of draw a downtrend line, and that's basically what a bump and run is. But this would actually be a I would say closer to like a inverse bump and run, which is weird. I've never actually seen this pattern, but it could be considered bullish. It might break out of there and go higher. But we're currently sitting in the resistance zone. So support's between 1790 and 1850, and resistance is 2060 to 2120. JPMO, which is the JP Morgan Chase YieldMax ETF. So you got 1830 or 40, I should say, to 1860 as support, and 2050 to 2070 as resistance. It's closer to support than it is to resistance. That's pretty much all I can tell you about that. Squee. Well, this thing hasn't really had a pullback. As you guys can see, it's just still ripping to the upside. Not to sound bearish on this ETF, but we saw something very similar with NVIDIA. If I actually pull up the NVIDIA chart, you guys can see here, we saw something very, very similar with NVIDIA, just absolutely shredded to the upside. And then we had a massive sell-off afterwards. So I'm not saying it's going to sell off, but Something just to simply keep in mind on the SQE chart here. And Bitcoin is overbought, just so you all know. So support is, well, basically this level here, about 2040 to 2150. I'd be looking to definitely pick up some shares roughly around this zone. So AIYY, not really much going on there. You guys can basically see that we had a green candle followed by a larger red candle that is considered to be a bearish engulfing candle, although you have this kind of bullish wick rejection here. So that's pretty much all I can go on with that. The Moderna one, so your support is between $17.60 to $18, and your resistance is $19.50 to roughly about $19.75 or so. This one's relatively new. Can't really say much on it. I mean, we're sitting in the resistance zone, so me personally, I wouldn't be buying this right now, but that's just me. It could always go higher. After all, you do have green candles moving up into this resistance. That's generally speaking pretty bullish. So we'll do a quick take on the Defiance ETFs just to close it out. Not much going on here. Obviously, we want to see bigger green candles than we see red ones. We're not seeing that currently. Similar thing with JEPY and IWMY, although IWMY does seem to look better than the other two. But again, we've told you we're more bullish on the Russell than we are the other indices because the other indices are currently sitting at almost all-time highs. So anyways, this is our TA video for the week, our buy and sell zones on the YieldMax ETFs. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.